Welcome, everyone. Welcome to this live, fully active webinar brought to you by the Monroe County Bar Center for Education. Today is June 1st, 2021, and our program this evening is Racial Disparities in Housing, How Municipalities, Homeowners, Brokers, and Banks Can Help, hosted by the Lawyers Coalition for Racial and Social Justice. There are a few of you who are applying for CLE credit. To comply with accreditation regulations, please fill out your affirmation form and evaluation sheet at the end of the program and email back to Danielle Matias. In exchange, you'll receive your certificate of attendance after the program via email. Please note that all attorneys must attend programs in their entirety to receive credit. According to the New York State Continuing Legal Education Board, CLE providers are prohibited from issuing partial credit. Please note that everyone's line has been muted for the presentation portion of this session. If you have a question for the panelists during the program, please submit it using the Q&A feature. You may also send questions to fellow audience members or to the host for technical difficulties using the chat option. Our first speaker this evening is Shane Wiegand, who's the co-lead of the Anti-Racist Curriculum Project. And with that, Shane, take it away.
Thank you so much for having me. It's an honor to be here, especially with my friends Melissa and Ruhi. And I'm so excited to share a little bit of the history that I've uncovered with the help of a number of friends here in Rochester. I'm a fourth grade teacher in Rush Henrietta. And I'm also, like she said, on the Anti-Racist Curriculum Project, where we work with school districts across Monroe County. We're working with half of the school districts right now on helping tell the story of racist policy and resistance in Rochester. The stories of so many civil rights leaders, including many of whom I've had the chance to know and hear their stories through my work in groups like City Roots Land Trust and Connected Communities. And it's an honor to help share their stories and the research that their stories have helped uncover about how our community made the decision to segregate itself and create two communities, two Rochesters, and the way many fought back against that and the way we might continue on that legacy today. A quick note before we begin. Our community is very much marked by racial discrimination and disparity, as seen by the Hard Facts report from 2020 that came out just this past August. Whether it's ELA proficiency, median household income, child poverty, home ownership rates, home values, the differences between Black, white, and Hispanic communities are stark. When you look nationally, our white-Black wealth gap is almost 10 times difference between the wealth that Black families have compared to white families. When you come back to Rochester and look at almost really any health indicator, from food insecurity, asthma, uninsurance, high blood pressure, mental health not being good, and you look at where those problems are concentrated, it's in the inner city of our community, as it was designed. When you take a look at this map of our census data, you can see every blue dot representing one white person, every green one Black, every orange one Hispanic. And you can notice the way our suburbs and the crescent side of our city are starkly different, and that segregation is very much a part of our community. In fact, EdBuild in 2020 marked Rochester and Penfield's border as the most segregating school district border in all 50 states. The border between Brighton and the city is number 6 most segregating school district in the country, and West Irondequoit is number 7. So how do we get to a place where our home ownership rates are so starkly different, where school segregation is number 1? A big part of that is that in our community, one, many fought for this racial discrimination. And another problem is that many helped make this a story that people did not know. We haven't had the courage oftentimes in our community to tell the truth about what happened in our community, that we might, in telling that truth, be a part of building a community that is just and equitable for all, especially in living out these words of the great James Baldwin, who writes, "Not everything that is faced can be changed, but nothing can be changed until it is faced." And it's my hope that it'll help us face some of this history, and that Melissa and Ruhi will help us dig deep into how we can take this history and how we can use it to create policy and inform an anti-racist change in Monroe County and in our country that might undo this damage and create equity. So let's face this history, and let's do it acknowledging that from Austin Stewart and Frederick Douglass facing the racism and slavery that happened right here in upstate New York, in the town of Rochester's, Penfield, and Henrietta and Gates, to redlining in the 1930s, people of color have always named and faced the racism in our community head on when many folks chose not to. This is Howard Coles, editor of the Frederick Douglass Voice newspaper. His daughter Joan is on our advisory board of the curriculum project to help us tell his incredible story. In the 30s, when redlining began, he used his paper to call out the racial discrimination he was seeing, finding that in just 2 neighborhoods, Black folks were allowed to live. Real estate agents, banks, realtors, lawyers, the local government, everyone was working together to make it so that there was just 2 places. The 3rd ward, that Clarissa Street, Plymouth Exchange area of the city, and the 7th ward, that Clinton, Hudson, Portland area of the city, Baden, Ormond, that people of color were allowed to live, just in those 2 places. Coles did some intense research and found that in 30% of those properties, there wasn't even running water. A report, thanks to Howard Coles' research that came out a year later by the city, found that in the 7th ward, half of all homes were not fit for human beings to live in. And over the next 30 years, those were the neighborhoods that African Americans were packed into by design, by de jure segregation in Rochester. But many folks continued to fight back like Coles. Or Dr. Anthony Jordan, who connected what was going on with housing directly to health, finding these housing issues were causing people of color to die from all causes at 50% higher rates than those of whites. The tuberculosis rates among people of color was 2.5 times that of whites. Think about that today. When you compare a child who's born in Pittsburgh today, according to Common Ground Health, is expected to live almost 10 years longer than a child from Rochester's Clarissa Street Plymouth Exchange neighborhood. 10 years in our community, again connected to housing. Or let's take a look at Dr. Lunsford, who integrated the Red Cross in our country by having a number of light-skinned Black folks go pretend they were white at the Red Cross, give their blood and have it get mixed in with the white blood. And then they called out the total just joke that was going on with this sort of a thing and actually won. And Lunsford got elected to the board of the Red Cross, or even fought against U of R in their medical school for not allowing any Black students in until the late 1940s. Dean Whipple, the Nobel Prize winner, was also a racist and refused to allow Black applicants to the nursing and medical programs because they'd have to examine white women. And he proudly said that in the 1939 state commission on the subject that Lunsford helped set up. Unfortunately for Whipple, Lunsford embarrassed him and the state threatened to take away the tax exemption from U of R if they didn't admit Black students. And thanks to Lunsford, 1 Black student each year was allowed in. Or when coming back to housing, not just with health, they're so closely connected. Almost 10 years later, the Reverend Body still speaking out about nothing having been done, saying from his church pulpit that the housing situation has always been an enigma to people of color. In Rochester, only 2 areas have gracefully been made available for him. And if any attempt is made to move out of these Black ghettos, that attempt is met with opposition. And today we're going to look at some of that opposition, both in something called the 1934 National Housing Act, something called racially restrictive covenants, that this act codified racial steering in the real estate markets. And we're going to take a look at zoning and at school integration and the movement against school integration in our community, as well as taking a peek at the way the local bar association was a part of helping maintain the status quo of segregation in Monroe County. So let's take a look at the New Deal. It's the wake of the Great Depression. FDR, former governor of New York State, is elected president and signs into law one of the most racist policies since enslavement. This was called the National Housing Act. It created the 30-year FHA mortgage, that fixed interest rate, though very little money down up front. This policy and all of its accoutrements were tied right into the GI Bill of 1944 and helped benefit families all the way up through 1968 have access to home ownership and to wealth. And explicitly written into this law was this language, that if a neighborhood is to retain stability, it's necessary properties continue to be occupied by the same social and racial classes. Any change in social or racial occupancy leads to instability and a reduction in values. Even going on to be clear that racial deed restrictions should be put on all deeds from homes that receive federal subsidies or funding that explicitly prohibit the occupancy of properties except by the race for which they're intended. Even saying that highways should be used to separate inharmonious racial groups. One of the biggest reasons we got 490 going right through the 3rd Ward and the Inner Loop, through the 7th Ward and the Southeastern Loop portion where Strong Museum is today, decimating Black neighborhoods in our community. But let's take a look at one of the ways the National Housing Act was enforced through something called redlining. Redlining was essentially almost like a race-based zoning, race and class. Neighborhoods were given ratings of best and desirable if they were 100% white, middle and upper middle class. Yellow meant declining, maybe lower class families, maybe those neighborhoods, the homes were a little bit older. You could still get an FHA loan, but not as good of a rate. And red line neighborhoods meant hazardous. If even one Black person lived in the neighborhood, it could get a red line rating, meaning no federal investment would go into those neighborhoods. People of color would be steered there, while white folks would be allowed to live wherever they want and receive federal investments through mortgage subsidies and insurance that would allow them to build incredible wealth, as my family did through these policies. So let's take a look at the actual government assessor's report for some of our neighborhoods that helped us determine which neighborhoods would be segregated. Take a look at Cornhill, or what was called the Clarissa Street area. 75% Black, 10% foreign, therefore deemed hazardous. People of color would be steered to that neighborhood as well as that Hudson Clifford area. Compare that to Pittsford, East Avenue Estates right by Oak Hill, 0% Black, 0% foreign. Notice in this class and occupation, it says businessmen, whereas if you look up here, it says daily workers, not even attributing the status of a man to the people who lived in this Cornhill neighborhood. Or compare Beechwood, the neighborhood I live in, and it helped get me into this work through the work that I do with City Roots Land Trust that Melissa's going to talk on later. When you take a look, this neighborhood was redlined because it was 2% Black. Today, it's almost 70% Black in Beechwood. Segregation by design. Compare it to Kodak's Meadowbrook neighborhood. 0% Black, therefore green line. Therefore, if you're a white person, you can get a 30-year mortgage and move into a home and build incredible wealth for your family and security. These policies were so effective that in Monroe County, where all of our suburbs were green line, the most integrated suburb of our community in 1960 was Henrietta, with just 11 individual people of color, led by Dr. Walter Cooper and Helen Cooper, and some friends at the NAACP who decided they'd had enough. They tried other suburbs, but found no luck. The reason Dr. Cooper said they moved to Henrietta is they had no other place to go. The whites in Henrietta were the least organized, so they wedged their way in, often with lawsuits, with trickery, straw man deals. But today, Henrietta is our most diverse suburb. To give you some national scale, Rothstein and the Color of Law writes, FHA and VA loans insured half of all new mortgages nationwide. In fact, they gave out over $119 billion in mortgage insurance, and over 35 million families, like mine, benefited from these VA and FHA-backed loans, 98% of whom were white. And here's that first GI loan being given out by ES&L Bank right here in Rochester. Now, prior to redlining in the National Housing Act, the Real Estate Board, real estate agents in Rochester and nationwide were doing their own policies of racial segregation, racial steering, putting covenants into deeds, doing their own appraisals based on race, and making sure that Black people couldn't move into white neighborhoods. In fact, until 1956, the National Association of Real Estate Boards Code of Ethics said that you would lose your license if you showed a Black person a home in a white neighborhood. Now, Howard Coles, who you met right at the beginning of this presentation of the Voice newspaper, found out about this racist code, got his real estate license, and began to show homes to people of color in towns like Brighton or white neighborhoods like the 19th Ward. Frank Drum and his friends at the board went into action using this policy to force Howard Coles out of the industry and maintained the status quo of segregation starting in the early 1920s all the way into the late 1960s. One example of this is Dr. Alice Holloway Young. Here's an upper middle class lady. She's an administrator in RCSD, first Black principal in all of Monroe County. She helped found Monroe Community College. She helped found the Urban Suburban program. And this lady was a legend. She's with us still. She just won the New York State Medal of Freedom. She's incredible and she's a good friend. But in 1957, even though she had the money to buy a house pretty much anywhere she would have wanted in Monroe County, because of her skin color, not a single real estate agent would show them a home outside of one of those red line neighborhoods. So Alice Young did what the 57 other people of color did at the time. She found a wealthy white woman, Harper Sibley of the Western Union Telegraph fortune, who decided to help them out and bought a house for them, sight unseen, on Millbank Street in the 19th Ward. Now the Youngs bought that house through a private loan through them, and kind of moved in the middle of the night to kind of escape the wrath of the Klan and their neighbors. But it wasn't enough. That morning, they found this note signed by the Ku Klux Klan of Milbank Street. Alice goes on to talk about how the Klan threatened to burn their home down and threatened them with all kinds of acts of racial terror over the following years. Alice has asked that when I share her story, I mention the one white family on the street, the Bushes, who decided to stand with the Youngs and help them face that racial terror as allies and help them live there for the next 17 years. And Alice asked me to tell that story so that the next time we hear someone say, oh, that was just the times, that we don't forget about people like the Bushes, and that we don't decide to also be those kinds of allies in the current day movement for civil rights. When you take a look though at Rochester, you don't think of it as a Klan town. You might have thought, oh, what was Alice Young talking about? Or maybe it was a Yahoo pretending to be from the Klan. But take a look at this front page photo from the Democrat and Chronicle in the 20s. 8,000 Klansmen burning 3 50-foot high crosses in what is today East Rochester High School's football field. Pretty startling to see. 1910 to 1948, something called a racially restrictive covenant. This is the next racist policy I want to really dig into. The federal government codified these with the Housing Act, but they began in Rochester well before, with Kodak and banks like ESNL trying to push this into real estate across Monroe County, as well as the local bar association. But let's talk a little bit about how we found this data. So this work really came out of some of the work that was going on at City Roots Community Land Trust, worked with some of my students, our friends at East High School, my fourth graders, and then we partnered with Yale Law School's Environmental Protection Clinic to take some of our research and dive a little bit deeper. And what we found was startling. So as I'm sure you all know, when you buy a house, you get a deed, and on the deed, there's a list of rules. They're usually pretty standard, they make sense, the rules you have to use to keep your home. But one of those rules explicitly said that these dwellings should not be occupied by persons not of the Caucasian race. And this was something that was done all across our community, including by Rochester Bar President Early F. Case and many of his real estate lawyer friends across Monroe County. You'll see this even done by Monroe County's entire legislature and the county manager, who put hundreds of these on county-owned tax foreclosed properties, saying that no person of any race other than the Caucasian shall ever use or occupy any building or lot. Kodak and USL Bank putting these in Brighton in the Meadowbrook neighborhood, who recently actually added an anti-racist covenant and is taking steps towards reparation. I think we'll talk a little bit more about those kinds of things later, but wild to note that Kodak was creating whites-only housing developments that had comments like no lot or dwelling should be sold to or occupied by a person of color, and every one of those deeds in that whole giant property right over there by Brighton High School. The Catholic Church got involved too. The Bishop John Francis O'Hearn signing these racist covenants underneath church buildings like St. James Church in Irondequoit. Or let's take a look at what was going on in schools, like in Gates, where the school board put underneath their school lots covenants like this one, saying no lot shall ever be used by members of any race that is not Caucasian. De jure school segregation right there. Or Pittsburgh's East Avenue Estates, these racial covenants advertised right in the Democrat and Chronicle. Over 2,000 of these advertised in the DNC in Northwest Irondequoit, one of which was agreed to and bought by Walter Wegman, founder of Wegmans, who agreed to the racial covenant, even though he didn't have to. He used the wealth from his home to build one of the biggest grocery chains on the East Coast, thanks to this whites-only mortgage and whites-only plot of land that he lived on. When his covenant expired, he reignited or redid that racist covenant so that when he sold it, the next family had to keep it whites only as well. These are all over though. Penfield, Ellison Park, Greece, all over the place. Gates, the head of the Builders Association, Norman Huck, and the head of the bar, Frank Drum, went in together on building by Brookley Country Club, these all whites suburban developments, the Brookley Tract. You'll see these in Beechwood, North Winton, the Browncroft neighborhood, and the 19th ward. And as always, from Alice Young to Howard Coles to Austin Stewart, people of color in Rochester have chosen to be anti-racist, to face this racism head on and to fight back. At the time, Judge Davis was lawyer Reuben Davis, and he could have lived anywhere he wanted, except no real estate agent would show him a home. But he wanted to live in the 19th ward, close to the Youngs, so he decided to start looking for a house and to get creative. He describes it like this in his oral history of the public library. He says, it was 1958. We saw a house we liked in 135 Elmdorf Ave in Rochester, a block or so west of Genesee. I'd say there were probably 4 Black families that lived anywhere west of Genesee at the time, and the owner refused to sell to us because we were Black. There was a restrictive covenant in the deed that these houses, when built, were not to be sold to people of color or Italians. He goes on to say that he was active at the NAACP at the time, and a white friend bought the house and transferred it to him. And that's how they had to go through those kinds of devious methods in order to find housing. Notice this is the year he bought his house. Nothnagel was the realtor that was enforcing this racist covenant, even though technically after Shelley v. Kramer, they shouldn't have been able to do that. And yet he had to resort to these kinds of devious means. He even goes on to say that his experience was typical, even for those who had the same level of means that he had. Later, he became the first Black judge in all of Monroe County. Let's take a look here, though, at this map. You'll notice where the covenants are today in those Black spaces. We estimate we found about 10 to 20,000, and estimate another 10 to 20,000 of these racist deeds are yet to be uncovered across our community. And we are working to uncover them and to add anti-racist covenants in each of these neighborhoods and help neighbors that live in these places that today are mostly 95% white neighborhoods to own this racist past and be a part of making that reparation. Meanwhile, at the state level, Black activists continued to fight for justice. People like Cooper and Young helped get this Commission Against Discrimination done in 1958 that helps us understand more of the impact of these racist policies in the Black community, finding that 80% of all Black folks were forced to live in just the 3rd and 7th wards. When we look at the Latino community that started to grow in the 1950s, especially from Puerto Rico, you'll notice that 7th ward area is where those folks were oftentimes steered as part of that redlining. In these 2 neighborhoods, more than 1,600 units had either no bathroom or a shared bathroom. And in more than 2,000 units, there was more than 1 person living in each room. This overcrowding, directly caused by redlining, led Connie Mitchell to become the first person of color elected to public office, running against these redlining conditions, writing that she ran because she was living in a community bursting at the seams because there wasn't open housing. She says when they looked for their house on Gregg Street, the real estate agent told us, I can't show you houses west of Jefferson Avenue. They're not open to Black people. So we were confined to Jefferson, back to the river, to look for a place to live on the west side of the city. Meanwhile, the 3rd and 7th wards still had 30% of all units with no running water, whereas trash pickup, children being bitten by rats, all kinds of horrific conditions and health issues because of what our community built and allowed to continue to happen. In 1958, they found that not a single FHA or VA loan was given to any Black person in any suburb of Monroe County. And those few Black folks that made their way into a suburb or white enclave faced significant violence and resistance, whether it was the Klan in Alice Young's case, or in the Biases case in 1964, white neighbors throwing rocks through their windows and threatening them with death if they didn't move. They moved to Henrietta, joining the Lees and Coopers and Wells, but not before having to sue all the way up through the highest courts in New York State to live in their house on Gatehouse Trail. Or the Tullivers, who also had to sue their neighbors who tried to buy their house out from under them before signing the final paperwork. It was illegal. The Tullivers won in court, thanks to some of the lawyers at the NAACP who stuck with them. People like Judge Davis, right? Or Hayes, I think was the other guy. Or Ellen Stubbs, who had to sue to live in her home in Greece. Now, in these redline neighborhoods, communities of color came together. They created thriving communities in spite of the disinvestment and segregation. Thriving churches, jazz clubs, Black-owned businesses, grocery stores, Shep's Paradise, the Python. They hosted, world-renowned jazz musicians and created incredible community in spite of the racism that was happening. But that was going to change. In the 50s and early 60s, urban renewal came to town. And whites-only committees headed by Elmer Millman, Central Trust Bank, and John Dale with the city kept Black people like Howard Coles off of those committees who tried to get on them because of their skin color, and did utter devastation to these predominantly Black redline neighborhoods, building 490 and the Inner Loop right through the hearts of these neighborhoods. In the 7th Ward, 886 families were displaced from their homes. Churches were torn down to make way for white businesses like Pepsi Bottling Company, or some small amounts of affordable housing that didn't make up for the number of displacements. Or in the 3rd Ward, where over 850 families were displaced, Black-owned businesses like Stevens Grocery were destroyed to make way for what our white city fathers saw as progress. If we take a look finally at integration, if you look at this map on the right, you'll see the outer ring or green line neighborhood schools had almost 0 to 1% Black students. And you look at the neighborhoods that were redlined, you'll see 90 to 95% of the students in those neighborhoods at those schools were Black students. Significant issue. The NAACP sued the Akins case. Dr. Cooper got involved and a number of other folks. And it led to an over 10-year battle to get RCSD to integrate. Now we know Brown versus Board happened in the South in the 50s. You see these stories of Elizabeth Eckberg or Ruby Bridges facing horrific racial harassment from white parents trying to keep those students from coming to their school. Almost 10 years later, in 1971, mobs of white parents gathered outside of Charlotte Marshall High School, protesting Black students integrating their schools, hurling racial epithets, throwing rocks, glass, tire irons at students of color who were attempting to integrate these schools, forcing groups like at Charlotte, the Black Student Union, led by James Beard, to organize just for self-defense and to fight for their right to a fair, equal, and integrated education. As mobs of sometimes hundreds or even thousands of white parents like these marched down the streets of Rochester. In fact, over 4,000 white parents gathered at the War Memorial in the 1960s, led by school board member Dr. Louis Cerulli, who still has School 34 named after him, to protest and actually encourage them to be militant in their fight against integration. And these angry parents, they won. 1 year later, RCSD abandoned its school integration plan, and the suburbs very much followed suit, minus a tiny bit of urban suburban, which has led our schools to be some of the most segregated in the entire country. And finally, we have to talk about zoning. As civil rights led to the Fair Housing Act and the Voting Act, the suburbs started to get smart. These whites-only enclaves realized that redlining wasn't going to work anymore to protect their whites-only properties and property values. So zoning boards went from having incredibly lax zoning to incredibly restrictive zoning. Groups of lawyers and doctors in Penfield off of Scribner Road actually organized and petitioned the zoning board and town board of Penfield to create exclusionary zoning to restrict access to people based on class, because civil rights law still allowed the discrimination of people based on class. And that's what towns like Penfield and Pittsburgh did. They made it so that their lot sizes had to be bigger. It was almost impossible to build any kind of apartments and affordable housing. And those exact same zoning codes are the same ones that we have today in these predominantly white enclaves. But people like Robert Rhodes, who was the head of the NAACP at the time, fought back and called what Pittsburgh was doing in 1968 with zoning as the new racial covenants, saying that this would lead to a racial apartheid when the community would be divided and on its way to self-destruction, very much prophesying what has happened in our community today. For children born in a neighborhood like Pittsburgh, where Robert Rhodes was fighting for anti-racist zoning, has kids that are going to live 9 years longer than kids in these predominantly Black neighborhoods of Rochester. When you take a look at our Homeowners Loan Corporation map and compare it to 2013 home purchase loan denial rates and the amazing work done by Empire Justice, you can see almost no loans are being given out in these Black neighborhoods. It's almost a new form of redlining that's happening in our community. You can look at the same thing with the Federal Reserve, who's found this data about who and who isn't included in our credit economy, where the worst mortgages are being given and the subprime credits are being given. Again, those same neighborhoods. You can see how that Black-white wealth gap in our country is still 10 times greater because of these kinds of policies. And the gap between white and Black home ownership has barely budged, even with the Fair Housing Act, which puts so much of the onus on enforcement on the individual who is discriminated against to sue, as well as HUD to be able to actually take away funding through block grants to communities that failed to affirmatively further integration. George Romney, the HUD secretary under Nixon, was actually fired for trying to enforce it, and Nixon ordered the Fair Housing Act not be enforced through HUD. Nicole Hannah-Jones at the Times has found that since Nixon, the Fair Housing Act has only been enforced through the removal of funds 2 times, in part because we have failed to truly try to act and hold this accountable. And yet I feel excited about some of the things that the Biden administration is starting to talk about in regards to what might happen with these areas. But for now, we're left in a community that is marked by racial segregation, that has to do with schooling, housing, and with health. And I hope as I close here, I want to remind you of these words that I started with, where Baldwin writes, not everything that is faced can be changed, but nothing can be changed until it is faced. And it's my hope that if we face this history head on, and we face some of the solutions that may be difficult, if we're willing to get uncomfortable the way Howard Coles and Alice Young and Dr. Cooper did in the past, that we might bring about that racial justice and that equity that we so are hoping for today. If racist policies, federal, state, and local policies can create this inequality and segregation, I believe that similar policies that are anti-racist can help eradicate them and begin to repair some of that damage that's been done. I can't wait to hear from my federal panelists, and I'll turn it back over to you, Cassie. Thank you so much for having me.
Thank you so much for that historical context and kind of explaining how we've gotten to where we are. And up next, our next speaker is Ruhi Maker, who is an attorney with the Empire Justice Center, co-founder of the Community Development Block Coalition, co-founder of the Greater Rochester Community Reinvestment Coalition, who's going to start talking about some of the changes we can look for in the future.
So as Cassie said, I co-convened the Greater Rochester Community Reinvestment Coalition with Melissa Marquez back in the early 90s. So I'll walk you through some of what CRA is all about, Community Reinvestment Act. Next slide, please. Melissa, sorry, thank you. So, Shane has laid out what happened with the Homeowners Loan Corporation and explained what happened with redlining. So we see that in 1977, the Community Reinvestment Act is passed. But one thing that's really, really important to understand about the Community Reinvestment Act is it focuses on lending to low and moderate income communities. There's nothing in there that says you must lend to Black and brown communities. So there isn't, even though it's done because of redlining, there's no mandate to lend to Black and brown communities. Essentially, the way CRA works is if you're a bank, and just to be clear, it only applies to banks, does not apply to credit unions, mortgage finance companies, etc. It essentially says where you have bricks and mortar banks, where you have branches, that's where your assessment area is. And every bank where they have bricks and mortar branches has an assessment area, and that's where you have to lend. And the other thing that's very important to understand about CRA is there's no like quotas or goals or anything like that. It is essentially the lending and investments are enforced by regulators, and it is essentially the regulators look at where lending occurs to meet is the bank meeting the credit needs of the local community, and meeting the credit needs of the local community is a pretty vague word. So I started as a housing lawyer. I mean, I've been around for quite a while, but at what was the predecessor of Empire Justice Center, I was representing tenants. And it became very clear to me that people were very rent burdened, and the vast majority of low income tenants and Black and brown tenants didn't have enough affordable housing. So that's where we came into looking at the CRA to see what the banks were doing. And that's where a group of us set up the Community Reinvestment Coalition. Next slide. So essentially, how do we say to the banks, this is what you need to do? Banks are examined, depending on the size of the bank, they're examined every 2 to 5 years. Banks have been merging, as many of you who've been around for a while know that we started off with a number of banks, and banks merge and branches close. So essentially, it's pretty much since the 90s, we have commented on every Community Reinvestment Act exam. The regulators are the New York Fed for state chartered banks, and the Department of Financial Services, which is basically the New York Banking Department. So it's state chartered bank is examined by the Fed and the New York Fed and the Department of Financial Services. And most of the banks in Rochester are what are called national banks. They have an NA after them. And they are actually regulated by the Office of the Controller of the Currency, and the OCC controller is appointed by the Treasury Secretary. We've again pretty much commented on every bank merger, and we have a pretty straightforward way of doing things. We look at data, and I'll talk about that in a minute. When we first started doing it, Melissa and I were cutting the data. We had a research assistant. I now have another PhD, Barb Van Kerkhove, who does very, very complicated data analysis. We cut the data, and then we make all these tables, and we meet with the banks, and we say, we've been doing this for 30 years. So we call them up and we say, hey, an exam's coming up, or there's a merger going on. And we walk through the tables with the banks. The coalition members come in and they say, here's what the community credit needs are. So we have many coalition members. We all meet, we did it on Zoom not so long ago, and they describe what the community credit needs are. And after we've met with the bank, we usually meet with the regulators for when there's a CRA exam. Again, they often fly in, and most of the time they've flown into town. We do these long meetings where we go over the charts and tables, we draft a CRA letter, and then we say to the bank, here's the letter, here are some of our concerns, or here are many of our concerns. The bank gives feedback, and then we send the letter on and it's a public record. All the letters we've done on CRA exams are all on our website, and we have some linked right at the end. Right now, for example, we're going through a bank merger. M&T Bank is buying a bank called People's United, I think it is, which is mostly downstate in New York. We recently are in the middle of negotiating a community benefits plan. We met with the CEO again on Zoom, a Western New York meeting, and we are and we're negotiating a CBA. And we'll talk a little bit about some of that in a few minutes. And I only have a little bit of time, so I'm going to go super fast. Next slide, please. So HMDA data is home mortgage data. We have that data going back to the 90s. It's public data. There's very detailed data. It's every loan by every bank, just about. Every census tract is included. We have data by race. We have data by the race, so low mod census tracts, minority census tracts, low mod households, and Black, Hispanic, Latinx, and Asian households. So we have a lot of data, and what we do is we look at who the CRA covered banks are. Remember what I explained was that the banks have to have a branch. So if Wells Fargo makes a loan in Rochester, Wells Fargo doesn't have any depository branches. They don't take deposits. So all the loans at Wells Fargo are not part of their CRA record. And as things have moved away from branches to the internet, etc., the whole framework of CRA has actually kind of become outmoded. And for 20 years now, we've been trying to update it. We're still trying to update it. But there are a lot of limitations on what CRA does. Small business data is very limited. I won't go into too many details. And perhaps most importantly, community development loans, investments, and grants are not public. And if the bank agrees to give them to us, we can see what's going on. So the way we compare apples to apples is we take all the data that's going to low mod households, low mod census tracts. We make sure it's not double counted. We take the bank's deposits, and we take what the CRA lending is, and we essentially come up with the percentage. And we have been doing that now for a while, so we can show over time what a bank is and isn't doing, not doing. So this is kind of important because there was something going on around CRA. And the bank was like, oh, we did $50 million. What we were able to show was that when you looked over time, they were actually doing $50 million less. And so can we go to the next slide? I'm just touching very briefly on a couple of of banks, and you have the data, you can look at it in great detail. One of the issues that we're finding is that as banks grow bigger and bigger, even though the CEO is nearby, so in M&T's case, the CEO is in Buffalo, it's really a Western New York bank. As it gets bigger and bigger, even though the amount of lending is huge. So for example, in 2020, we have a CRA exam, again, that's in the slide. They invested $211 million a year in the Rochester market. That's a huge amount of money for 3.8 million in deposits in Rochester. They have a market share of almost 20%. They're getting bigger and bigger. But when you look at 2020 and you compare it to the past, as you take it as a percentage, and again, the data from community development came from the bank to us, it's only 5.6% of its deposits. Whereas in 2010, 10 years ago, when we commented on the exam, they had actually invested more money, 225 million, and 9% of its deposits. So what we're trying to essentially do with the banks is we want to see all your lending. We want community development lending to be public. We want the investments to be public, and we want more data, and we want to see how it's impacting Black and Brown communities. And I'll talk about that a little bit more. On the plus side, I've got very briefly the Canandaigua National Bank. Again, we started working on them, going back, there's a typo here I see, it's 2007. We started working on them, 15 plus years ago, and we commented on CRA exam, again and again and again. And slowly they start to make improvements. But I think because CRA is so outmoded, because it isn't focused on race, and because we have no way of telling how for most of the lending, with the exception of HMDA, mortgage lending, we can see how many Black and Brown, Black, Latinx, Asian people got homes, got loans, and got refis. It's very hard with small business. We can't tell the race of the borrower. We can tell the race of the neighborhood. And even then, for example, in the 19th ward, it could be a Black neighborhood, but the borrower could still be a white business. So we've been pushing for more data. I think we'll go to the next slide because I think I literally have like a couple more minutes left. So this is what's really important. This is some of the things that Shane touched on and that Melissa will talk about and I'll talk about. Homeownership, despite decades of CRA and trying to be different, Black homeownership is going down and down and down. And I was a foreclosure lawyer as well, starting in 2000. I represented homeowners in foreclosure. Some of our foreclosure advocates and lawyers are on right now. And that the subprime crisis made a huge dent in Black and Brown homeownership. People had safe, affordable loans. Some of those FHA loans that we finally got them to get after CRA, because of CRA. And as soon as they had a little bit of equity, they were targeted by the unregulated financial institutions who went in and said, we can lower your interest rate. And we said, we can lower your interest rate to X. And what they did was, at that time, they're called 228 ARMs, 2 years and 28, adjustable rate mortgage. So you get your interest rate is lower for 2 years, and then it goes up. And all of these people with fixed loans were tricked into taking on subprime credit and predatory credit, resulting in enormous damage to Black and Brown wealth. And so one of the things that we have to really recognize is that right now, if nothing changes, Black homeownership is going to go further and further and further down. So next slide. And this is a really, really complicated argument, and I only have like a couple of minutes to make it. So I'm going to pull out a couple of facts from here. So about in 2016, the Fed started to look at poor people. And and the different, so there's a Federal Reserve Board in Washington, D.C., and then there are different Feds. There's the San Francisco Fed, the New York Fed, there are 13 Feds. And what they realized was that the vast majority of people, 40% of Americans, did not have $400 in cash to meet an emergency. Now, remember, this is before COVID, right? So we, as far as you're concerned, you're working, you're fine. How are you suddenly going to need to take care? You're supposed to have 6 months of basic expenses saved to meet a no income emergency. The other thing that the Fed found was that there was a lot of income volatility. People didn't work fixed hours. Their hours went up and down, but their bills remained the same. And the thing that's really, really important to understand about what's happening in 2021 is that people work jobs, people work 2 jobs, 3 jobs, but they don't make enough to pay all their bills. They don't make enough to pay housing, their car loan, which they need to get to jobs because of segregation and where the jobs are, childcare, the medical care, if depending on where they are, if the student loan, if they have their student loans, you essentially don't have enough money to live on. And when you don't have enough money to live on, you decide, well, today I'm going to pay electricity because if I don't, I'll be cut off. Next month, I'll pay the house because if I don't do that, they'll start a foreclosure action or the landlord will evict you. We have a report we did, Too Big to Fail. And we showed how people are making very complicated choices. And again, I think Melissa will talk about that. So, we were just talking to someone, a regulator in New York City, and they were saying, oh, Rochester's got really good numbers. And so, again, I'm going to touch on the fact our poverty gap, if you look at comparable size cities, the worst is 274 in racial segregation. We're 246. So there are very few cities worse than us. Poverty gap, rent burden. Rochester is always, we've had affordable housing if you can save money, get a down payment, and do that, and become a homeowner. Well, that's not really very easy for people living paycheck to paycheck, Black people and brown people on low incomes and paying too much for rent.
All right, Ruhi, I'm gonna let you wrap up real quick, and then we'll move to
one last,
Melissa.
So the New York Fed basically looked at access to credit, and they did a county-wide map, and they came out, and they found our numbers were really good. Only 20% of the county had problems. We begged and pleaded with them and wrote to the president of the New York Fed and said, please, please, please do a zip code map. And this is what's really, really important. And Shane, zipped it up really fast, but 53 to 75% of majority non-white zip codes had subprime credit. And then, sorry, I think I have to wrap it up now. I'm not even sure I have a next slide. And Melissa's going to talk about very quickly, essentially, you live paycheck to paycheck, you don't earn enough to pay your bills, you have subprime credit, and the banks don't have any products for you, and unregulated finance companies essentially lend to you. Banks won't lend to you at 10% or 11%, whereas unregulated finance companies will lend to you up to 24.99. And depending on the product, you can actually go to triple-digit interest rates. And so you're in this cycle of never getting out of a credit trap, and you're never in the cycle of making wealth. So I'm going to turn it over to Melissa now.
Yes. So, and just so people know, Ruhi will be back after Melissa's presentation. Our next speaker is Melissa Marquez, who is the CEO of Genesee Co-op Federal Credit Union, a board member of the Community Land Trust, and a co-founder of the Greater Rochester Community Reinvestment Coalition. And she's going to pick up where Ruhi left off. Take it away.
Thank you, Cassie. I wanted to tell a quick story about myself, in that I came from, I got to Rochester a little over 35 years ago, and I came here from San Diego, California. And lots of people through all my life have said, how could you leave San Diego and come to Rochester? And one of the main factors that led to that decision for me was the fact that as beautiful as San Diego looks, as gorgeous as the weather is, it's an incredibly segregated city. So that National City is where the Blacks live. Barrio Logan is where many of the Latinos live, or in San Ysidros, or in Chula Vista. Those were the places that Blacks or Latinos could live. My mother worked in Barrio Logan for Bank of America. And her coming home when I was 13 and 14 years old, crying and crying over the fact that the Bank of America would not make any loans to any of the people who lived in Barrio Logan, and that it just was destroying her as a loan officer, because she knew the people would repay the loans, influenced me so deeply that I truly believe it's the reason I now am the CEO of a local community development credit union, because it affected me in such a deep way. Little did I know that I'd be coming to a city as deeply racially segregated systemically as it is. And I appreciate the presentation that Shane laid out for you today, because it really does speak to why our city and our community looks the way it does. I just want to say Genesee Co-op, where I am the CEO, is a 40-year-old community development credit union. We have 4,000 members. We have 32 million in assets. So we're a very small credit union. And we serve people who live predominantly in the city of Rochester. A majority of our members are low income. And we have an actual single office on Gregory Street. 10% of our members came to the United States as refugees. We are also primarily a mortgage lender for first-time home buyers. And 90% of our lending in 2020 went to city residents or people of color or people who are low income. So it's just a real quick, synopsis of our credit union, just so you have that as a background for who I am and the credit union that I lead. So I'm going to specifically be talking about two solutions that are actively working to address the historic racial disparities in housing and the systemic effects of the income inequality and the wealth inequity that Shane and Ruhi have been already talking about and will continue to talk about. The first one is I'm going to be talking about community development financial institutions. I'm probably going to keep using the acronym, which is CDFIs. And I have been working for a CDFI for almost 25 years. I've also served on the board and committees as a volunteer of some national CDFIs. And the second part of my presentation, I'm going to talk about community land trusts, largely through the lens of City Roots Community Land Trust, although I also did serve on a national community land trust organization during the 1990s. And so I have a national perspective on community land trusts as well. So I wanted to specifically talk and take this racial disparities conversation and continue to make the connections that need to be made and that I see, especially as someone who has seen multi-thousands of credit reports from city residents, from members of our credit, from the two credit unions that I've worked for. And one of the key points, though, that I really wanted to make is that, people don't just start with a mortgage. They actually start with, just if you think about for yourselves, what type of credit did you first get for the first time that you got credit? It would often be a student loan for people going to college. It would be a credit card, although what I like to call, and I really encourage people to call a debt card, because it really is debt. A credit card is really debt. So it's just something to think about, that you have debt cards in your wallet. And that has helped you to establish credit. And then the third type is auto lending. And I'm going to talk a little bit more about auto loans in particular, because when Ruhi talked about some of the additional predatory kinds of credit products that exist, It's not just in home mortgage lending, it's increasingly in other types of products, and in particular, auto loans, or using auto loans for installment loans, or title, what are called title loans, is a big part of what people have gotten that to begin to establish credit. And I just want to be clear so that people do know that no lender makes a mortgage decision without relying on a person's credit score. Even our credit union does rely on a person's credit score, not to be the sole deciding factor, but it is a key part of when someone gets a mortgage. In today's market, the minimum middle score of 640 is a virtual requirement in order for a lender to be able to sell the mortgage on the secondary market, such as Fannie Mae and Freddie Mac. I wanted to also mention, because this is an important part of what the problems that have led to the continuing racial disparities and the wealth extraction happening to communities of color. And this is specifically in this whole area, or this topic of subprime lending, which people hopefully are familiar with, because it's a big, it's what led to the mortgage meltdown and crisis that we had in 2007, was the amount of subprime lending that had gotten created. And subprime is a word that is based on you're looking at your credit score. So prime credit, A+, A, B. Once you get into what is known as subprime credit scores, C and below, which would typically be 600, a credit score of 600 and below, that is considered subprime. And mortgages are based on trying to primarily serve the prime market, but finance companies and even some of our mortgage lenders do look at and have provided subprime lending in the mortgage market. But the one place that has really started to grow since the end of the, or since the 2007 mortgage meltdown, that where our economy was melted down, is in the auto lending area, and also in installment lending. This particular article in the Washington Post is about Mariner Finance, primarily as a installment loan lender who also uses the cars, people's cars, as security on loans. This article, which was from 2018, focused on the growth of subprime lending due to the purchase by these companies, specifically by private equity firms, which is another player in this marketplace. And I just want to really point that out, because you might read about and hear about private equity firms. This part of the marketplace is just growing massively. The article states that Mariner Finance is owned and managed by an $11.2 billion private equity fund controlled by Warburg Pincus, whose president currently, and even in 2018, was Timothy Geithner, the Treasury, who was the Treasury Secretary in the Obama administration. This is the job he took after leaving the Obama administration. And this is also the same person who has specifically spoken out and condemned predatory lending, but is now running a company that supports the work of Mariner Finance, where rates are typically 36% interest or up to the maximum of the usury law in the state. So in New York State, when we see Mariner Finance loans on our members' credit reports, the maximum is at 24.99. When Mariner was bought by Warburg Pincus, Mariner had 57 branches in 7 states. In 2018, they had grown to have more than 450 branches in 22 states. So we're talking big money from private equity. And what do? They do a bunch of loans and they sell them then to the bond market, to Wall Street. Does this sound familiar? It should, because it's the kind of thing that happened that led to the mortgage meltdown that we had in this nation in 2008, 2007, 2008. I'm going to go to the very local, oops, I'm sorry, gotta go back. Okay, example, just so people can be clear or see that. So this is a member of our credit union. Our member had gotten a loan through Ally Financial and financed a 2017 Honda for $27,000. So when she got offered the loan from Ally Financial, her payment was $599 a month for 72 months. So what she was going to repay to Ally Financial was just over $43,000. Right after she'd gotten this loan, she came to us and was like, I don't know what I was thinking. I was right at the dealership. This is, they talked to me about an affordable payment, and I just signed up for it. And then when I began to look at what I was offered, I saw that it was going to cost me $43,000 instead of $27,000. Can you help me at the credit union? We were really instantly able to help this member. And we did a loan where her payment was $450 a month for 72 months. That means a total of $32,428 to repay us, including the $27,000 remaining balance that she had in principal. So that was a savings. Now, I want to be able to explain that often for people, this is what we call equity stripping. This is a way, this money, had she stayed continuing to pay to Ally, she would have ended up paying so much more in interest. All this money leaving her pocket, her community, and leaving the Rochester area place, and benefiting Ally Financial, another national, high interest finance company. And this member did not have, she had, it was not subprime. It was, she had B credit, but still she got this much higher interest rate than what she could get from the credit union. In the subprime world, which we see exclusively going to people of color, I have literally never seen a subprime rate above 20% go to a person who's white. A loan officer in my credit union can tell me what the rate is that someone has on a car purchase, and I will then know that that person is white or that person is Black, solely based on the fact that the only place I see high interest rates is with people of color. 23.99%, which is typical that you see in New York, would cost $24,000 in interest, the same loan. At our credit union, this was, this isn't actually the current rates, but at the time that we did this loan, at 12.74%, the interest would have been $11,700 for someone with a subprime credit score. And so again, that's savings of $12,300, a significant sum of money that needs to stay in the pockets of people of color, not have it being extracted. Okay, I just want to briefly talk about what a community development financial institution is, because that is the kind of financial institution that has been around for more than 30 years. In New York State, there are about 85 community development financial institutions. And CDFIs are created for market-based solutions that provide capital for mortgage financing and for small business lending to chronically underserved New York communities. CDFIs leverage both federal and private dollars to do economic development and as well as for mortgage lending. They are locally controlled institutions. They're accountable to their target market and their community. Many of the CDFIs, especially community development banks and community development credit unions, provide financial services and financial education for low-income New Yorkers, as well as promote responsible alternatives to the types of predatory loans that I was just showing you from Ally Financial or from a Mariner Finance for installment loans. There are non-regulated community development loan funds and community development venture capital funds. And then in addition, there are regulated institutions like the community development credit union that I run, or as well as community development banks. I'm also going to just mention that CDFIs, these are pictures of some of our members who have received mortgages as well as small business loans, because CDFIs are predominantly giving small business or equity investments to lend to business owners, as well as then providing mortgages for homeowners, community land trust owners, and as well as housing co-ops, which there are quite a few in the New York City area that are financed through CDFIs. This slide is actually something that I wanted to, that I included, oops, I'm sorry, I did that again. That I included because this is something I saw this morning. So it's hot off the press, but it really, for me, drove home the key point, so that I think is really important to specifically raise. Robert Shiller, he's a Nobel Prize winning economist, noted that home prices in the US rose 13% year over year in March, which is the fastest growth since 2005. This is 19% higher than the home price index was at the peak in 2006. This article also said that Shiller believes the current housing market environment is similar to 2003, 5 years before the housing market crash in 2008. And he also believes that such lofty home prices remove all but the wealthiest from the American dream pipeline. This, I felt, was something that was really important to talk about or raise and remind people, because right now, increasingly with the income inequality in the United States impacting people of color in particular, having that American dream that so many people have been able to achieve through home ownership is increasingly out of reach right in the Rochester market, which has always been known for being quite affordable, but in the most recent year and a half, it's just increasingly unaffordable for so many. And we've seen this directly at our credit union as well. Okay, how am I doing on time? So I'm going to now move to the second, oh, I did that backwards. Okay, I'm going to talk briefly about City Roots Community Land Trust. Shane and I are both board members of City Roots Community Land Trust. And it's been such a pleasure to get to know Shane through the work of City Roots. City Roots as community land trusts were founded in Georgia in 1970 by civil rights leaders to help poor Black farmers. And that concept of community land trusts is something that came out of the organizing by civil rights leaders. Community land trusts are democratically governed, membership-based, not-for-profit organizations. Community land trusts purchase and steward land for a community of people. And in order to ensure that land remains permanently affordable and under the community's control, they use a legal mechanism to establish a community land trust in any property that is owned by the land trust through something known as the ground lease. This is just a picture representation of the community ownership of land, which is what community land trusts, are doing across the United States. That gives resident control of buildings. So people on a community land trust, a single family home can be on there, a limited equity housing co-op, a condo, a multifamily rental. And what's granted to the owners of the buildings are a 99-year ground lease. The community land trust actually owns the land on which the property is located, the building is located. And it's really, the land is the most valuable part long-term in a community. The concept of permanent affordability is so key to what a community land trust does. The picture here is one of the homeowners who's purchasing this home here in the city of Rochester on Stun Street. And the land trust renovated this and is selling this home to this first-time home buyer for $50,000, which is incredibly affordable and helps us meet getting to people who are at 30 to 50% of the median income in the Rochester area marketplace. The reason it's going to say permanently affordable is because when or if this house was to be sold, there is in the ground lease, there's a resale formula that gives some of the equity and the investment back to the homeowner, but that equity is capped, and that the money that was used as to put into the house, any of our own money, grant money that was put into the house, is going to be retained by the community land trust to benefit the next home buyer. This is just a example of the quality of housing. It's been really important to the land trust that the housing that we provide is going to be of the highest quality and retaining, many of the wonderful characteristics of the housing in Rochester. And finally, this is my last slide. These are putting our values into action. City Roots Community Land Trust, like many land trusts across the nation, hold as their highest values this concept of permanent affordability, of radically building community as underlining the community part of community land trust, and really doing development without displacement. We don't want the people who live in a neighborhood to lose the opportunity to live in their neighborhood through when a neighborhood is increasingly becoming gentrified. So that's an important part of continuing to have neighbors living in a community such as Beechwood to be able to continue to live in the Beechwood neighborhood and not have to be displaced. So development without displacement has been a really important part of key value of the work of City Roots Community Land Trust. With that, I think, Cassie, you're going to...
Yes. So I have a couple announcements. The first is that the people who are getting CLE credit, the code for this program is 9947. Again, that is 9947. And if you happen to look in the chat box, there are a couple of important things in there. The email address for sending your affirmation and evaluation for Danielle Matias is in there. She just put the code in as well. And Shane thoughtfully shared both his presentation slide deck and a link to the City Roots webpage. So really good information in the chat box if you want to take a look. And now we're going to circle back to Ruhi, who's going to talk some more about the different options that we have available to us to help make things better. And then after Ruhi's presentation, we're going to take a quick pause, have people put questions in the Q&A box while we take a little break, maybe about a 5-minute break after Ruhi's next portion of the presentation, and then we'll come back to finish up with the discussion. So Ruhi, please do the second half of your presentation.
So Melissa laid out some of the issues. And so I'll actually just, I'm sort of showing, because this was about what can different people do, and I've quickly got a few slides showing what different actors can do within Rochester and at state and federal level. So I'll go to the next slide. So essentially, we have to kind of confront structural racism in this country. And Melissa very nicely shared some of her background. So I'll share some of mine. I was born and raised in Pakistan. At about the age of 19, I went to England. I went to law school in England at the London School of Economics. And then I worked there for quite a while and did come here till about 85. My husband is a professor at the University of Rochester. He is American, but I never lived in America until I came and moved to the States. So I think for me, some of these things that I'm talking about today, or what Melissa is talking about today, I've been saying some of these things, going back to the late 80s and the 90s. When you're a public interest lawyer, you're working very closely with low-income people, and I had a lot of low-income clients, and I also had a lot of Black and then Latinx clients as well. So you get to know them really well. And this is a kind of a long story, but I don't want to go into it. But essentially, when the Madison School was being built, the city was going to tear down 300 homes and rental units right off Plymouth Avenue. And the people who I represented actually in the end for about 5 years had been already displaced from Cornhill through urban renewal. And I really, really got to know the Southwest. I lived at that time in the 19th Ward, that we flew in from out of the country, and we had a sabbatical house, and we walked into the 19th Ward. We lived there. We eventually bought a house there. Our kids were born there. And I really got a clear sense of America. And the other thing that's a little complicated, and again, when I was in England, I was Black. Because when you are in England, everyone who's from the colonies, Pakistan, Caribbean, Africa, you're all Black. And so I came in and I was Black, but of course I wasn't, because people quickly said, of course you're not Black. And so so figuring out how the racial justice and race has been, for me, has been like, it's something I've thought about and worked on for a very, very, very long time. And I've never really understood. So, Melissa and I, it's all raw mortgage data. We look at the data, we look at the fact that low-income white Rochesterians at that time in the Northwest are getting 4 times as many loans as Black homeowners in the 19th Ward in the Southwest who are middle income. So if you're a low-income white person, you get 4 times as many mortgages, if you're looking at the population, as middle-income Black people who are applying for homes. This is in the 19th Ward. So we do the data, and we're like, I'm like a rational person. And I say, you show people the data, and it's going to get fixed. And here we are 30 years later, having spent, I probably do, I don't know how many bank meetings I do a year, hundreds, 1,000 bank meetings sometimes with CEOs, with senior vice presidents, and saying, when we first started, we were, you are not lending to people, and it makes no sense. These are people who qualify for loans, and it is pure racial prejudice. And, I remember a CEO saying, I lend to my people. And he was, here I was, they sort of joke about the fact, I'm very short, I'm only 5 feet tall. At that time, weighed about 90 pounds. Short brown woman with an accent, of a non-Anglo name. And I was telling this, 4th generation CEO, what he should do with this bank, and that he should lend to Black and brown people. And, again, the joke is, white men stand with their hands behind their backs, because it's getting late. So I'll share a couple of jokes, because what they really want to do is punch me out, because I can be very in your face. I've been very polite today. I've kept it under control. I haven't said anything rude or mean, but I am a pretty aggressive advocate. And I've never really understood why like what we're doing is uneconomic. It makes no sense. You know, corporations don't pay a living wage, and then the taxpayers are paying for Medicaid and are paying for food stamps and are paying, you know, I mean, those lines of people in their cars waiting for food when COVID happened. I mean, it should like shake us as a nation. And I'm not sure that it really shook us as a nation last year when we understood. So it's like, how are we going to make sure, you know, I don't know who's in the audience. I mean, the people I don't know. I don't know if any of you have any power where you work, or even if you're lower down. It's like you as white CEOs and all CEOs have to basically say there is a cost to structural racism. We have to confront it. We have to change. You know, Shane's talked about it. Melissa's talked about it. I could talk about it a lot more. And the other thing that happens around banks, which, you know, again, we've been talking about for 30 years, you know, when you walk into a bank, if the white stuff, and this has actually happened to some of our people who work at our office, who are not lawyers, but people who work at our office, who walked in and they, you know, it's like, you're a brown person. I'm not going to serve you. When we did our small business event, we had a Black businesswoman trying to get her own money out of her own bank, and the craziness they put her to share. She shared that story. We were talking. So she basically said, why am I going to try and get a small business loan from this bank? Because they won't even. So they were like, you got to, you know, they just assumed she was there to essentially, you know, she was committing fraud. I mean, it was her, and they may spend for half an hour she spent trying to get her own money out. I could keep talking, so I'm going to go to the next slide. So it's like, have staff that look like the community you serve, have SVPs, senior vice presidents, who look like the community you serve, have boards that look like the communities you serve. And, you know, I mean, for those of you who know bankers, you know, it's all, so let's talk about what banks can do. Melissa has really put me on to auto lending. That is my go-to thing for the next year. So the first thing so some of this is post-COVID. So many Black and brown people lost jobs. So many Black and brown people are still without their Black and brown income is still so high. You know, every person who lost a job through COVID should be entitled to credit repair. We need to figure this out. We have $400 million of the rescue plan. You know, you should not have your credits destroyed. We have a whole system in place. After we did the New York Fed did the study, we were able to put in place the Financial Empowerment Center. They only do 800 people. We need them to do 10,000 people. And of course, they need, you know, obviously 10 times as much money. So what about, why do people not go to banks? Because the reason low-income people and people of color don't go to banks is because banks are designed to essentially take advantage of the fact that you live paycheck to paycheck, that you are going to end up with an overdraft, because the whole system is designed to clear your checks in a way that you have an overdraft, and you're going to end up with large number of overdrafts. Jamie Dimon testified before Senate Banking last week, and he said, and he was asked, you know, you did a $1.5 billion in overdraft fees. Are you going to give that back? And he said, no. He said, if you asked us, you know, we wouldn't waive your overdraft. And in all fairness to the financial institutions in this town, where the CEOs live here or where the CEOs live nearby, we all came together literally week 2 of COVID, March 2020, and we had a long conversation about how fees were being waived and overdraft fees were being waived. And of course, Jamie Dimon didn't join that call. He doesn't know who I am. And so it's really, the reason people are and underbanked is because overdraft fees are designed to essentially rip you off. I mean, there's no other way to say it. They're designed to make profits from low-income customers. And again, that's something that we were trying to change through regulation. Hopefully we'll change it again. I really want to talk about auto lending. Many banks don't do direct or indirect auto lending. I'm hopefully going to see very soon the numbers of who's doing auto lending in Monroe County. And I also have some data on interest rates. So it's really, really important, as again, Melissa showed, a bunch of clients were sent to me. What she didn't have time to say was that what happens when you have an overpriced auto loan is that you refinance what you owed on the old car in your new car. And you're essentially trapped in this auto loan hell, and often the car may even be repossessed. So if you can't afford to live where the jobs are, so you're paying too much in rent, you're then given a bad auto loan. I don't know how we're going to make any of our low mod income Black and brown people, or even to some extent white people, into homeowners. As Melissa said, it's completely crazy. I mean, people are, cash buyers have moved in. It's a huge complication with how we're going to turn them into. But assuming we can fix some of these things, or the market changes, first-time homeowners who are from Black and brown communities don't have down payment assistance from their dad or their granddad or their mom or their grandmother who got that loan in the 50s and whose parents then got that loan. And so you essentially don't have equity in parents who are homeowners, don't have equity to give to their children, because housing prices in mostly in Black and brown neighborhoods have not gone up the way white neighborhoods have. So down payment assistance, President Biden is in Tulsa right now. He's announcing a special program. I didn't change my slide, but we'll have to wait and see what happens. One of the other things that we're really talking about is, like I said, we don't know where CD lending is going to BIPOC. So we need that information. We need that data. And then we, obviously hire bilingual ASL staff to serve the limited English proficient and the deaf and hard of hearing community. So I'm just going to keep jumping quickly, because I think I only have 5 minutes left? Probably not even 3. I want to talk a little bit about.
You have 5.
I have 5 minutes. I want to talk about testing. We have a testing program in this community. We don't test lenders. We need to test every financial product. And again, apparently this was just announced by HUD Secretary Fudge, that she's going to improve fair lending, discrimination. I don't know whether there'll be testing, but essentially enforcement. Right now, car loans are unregulated. Private equity is unregulated. We got to figure out a way to go after. Go after people who are benefiting, who are violating the laws and benefiting from poor Black and brown people. It's complicated with Dodd-Frank. Everyone knows there's Dodd-Frank, which happened after the meltdown. Car loans are pretty excluded from Dodd-Frank. There's very limited things that the various regulators can do around auto loans. The good news is that the Mass AG is going after a notorious car finance company called Credit Acceptance Score, which is 24.99%. I have 3 horror stories from them where they did horrible things, which I don't have the time to share. And Melissa has plenty of them as well. And if you look at the filing, the regulatory filing that Credit Acceptance Score did last year, you can see that the New York AG has subpoenaed information from Credit Acceptance Score. So again, to be determined, the new head of the CFPB is going to be Rohit Chopra, who has gone after car lending, including in New York. So fingers crossed that we're going to shut down auto lending. So I'm just going to quickly go, what can lawyers do? I'm going to just do 1 more minute on that. Oh, let's just go to lawyers. So really, we need a living wage. We would need you to advocate for a living wage, because as long as you can't pay all your basic bills on time, you're going to have a subprime credit score. And we need to figure out a way to have safe and affordable products for people who have subprime credit. That gets very complicated. Another thing, all businesses in Rochester can have a set aside and do purchases of objects or services from MBEs. And I see that Tina Foster is on. I hope she doesn't mind me calling her out. I don't know if she's still here. Fully staffed pro bono or paid legal advice and technical assistance for MBEs so they can scale up. So there aren't enough MBEs to go around. So we said, hey, 20% of all purchasing from all the companies in the Rochester MSA will go to MBEs. There's not enough of them. They have to become MBEs. It's complicated, and they need the technical assistance to be able to serve all of that. What does that do? They hire Black and brown people. When they hire Black and brown people, we increase incomes. The other really, really big thing is zoning laws. Shane touched on that. And essentially, it's like I live in a suburb and there are other suburbs where the lot sizes are way too big. That's a huge, huge issue. California tried to do it, very liberal California. They did not succeed. But the only way we can save the climate and the way we can have affordable housing and desegregate is to have low rise. I make it really clear, low rise, affordable housing, multifamily rental and owner occupied. I don't know if it's going to happen in my lifetime, but for those of you who are lawyers and understand zoning or are active in your towns, go run for town board, make change happen. And I don't know if there's anything else. Is there another? Oh, okay. So really, I'm all done. And I hopefully will work on this some more. As someone who's a public interest lawyer who has worked with poor people, and as any person will tell you, Melissa will tell you, when we were doing this, Shane said, "Oh well, it's their fault." People on the panel the audience will be like, "Well, America is a free country where everyone can be who they can be." And, I respect President Obama. We elected a Black president twice. Everyone's, well, look at President Obama. Anyone can be a president. America is the least mobile country in when you look at Europe and Australia and Japan. Yes, 30 years ago, I would take a home health aide who was making $25,000 a year, and we could turn her into a homeowner, and we could help her save money. We could do all sorts of things. That is no longer possible. I mean, for those of you who have young children, or for those of you who are young yourself, when you look at where is the money coming from for the down payment assistance, it's coming from the parents. And that is not something that is an option for many BIPOC. It's like, this is our time. This is a seminal time. All of you who are listening, I have to say, are you going to step up? And it's really hard. I mean, I've been doing racial justice work and economic justice work for 40 years, and I'm like, I had to spend all day resting in bed so I could speak today. That's how worn out and beaten I am. But, Melissa keeps me going. My colleagues, a lot of whom are on, watching me today, they are, they are my rocks, and they keep me going. And Barb Van Kerkhove is a genius. She hates, hopefully she's left. I have lots more tables. We have lots of resources. I'm just going to call it a day now.
No, don't go back and do the municipality slide that you skipped, because someone has specifically asked for it. And I think we have time before we take a pause, do some questions. Yeah. Thank you.
So state and municipality. See, I don't even know how to screen share. Melissa's running it for me. So we need a lot of money for low-income housing, rental affordable housing. I always love tenants, and this is what's really important. What Melissa said. Okay, the only way to be totally sure that someone isn't going to lose their home when they are low income is a community land trust. I mean, right now there's so much gentrification going on. I did this huge gentrification study on the Plex neighborhood in the 90s. I was like, oh my God, it's going to gentrify, when the city was building Madison. And I said, here are all the things we have to do so that the grandmas and grandpas don't lose their homes when Madison gets built. Well, I think finally we are starting to gentrify the 19th ward. We may start to gentrify the Plex neighborhood. We have to have permanent solutions. We have to have community land trusts. I cannot think of any way to keep people who are tenants and keep people who are homeowners safe. And I remember I represented tenants, I represented people in foreclosure. We have amazing foreclosure program out here. The attorneys are on, the paralegals are on. We have a great program, but it's going to be really, really hard, to keep people stabilized in home ownership. Community land trust. We have to pass zoning changes. And here this gets very controversial, and inclusionary zoning is, and a town can do it, a county can do it. You basically say, if you are building housing, there has to be a certain set aside for LMI families. And it's usually a small number because people get very panicked when you have, oh my God, I'm gonna have poor people living next to me, you know, and it's like, we're so racist in this country, you know, and it's sort of like, I mean, again, just, it's like, it's, you know, I don't even know how to talk about how, you know, so much of America, so much of white America is criminalizes Black and brown people. We can see it. I mean, we can see, not getting into the police violence, which is so critical, and I'm not talking about it now, but it's like, you know, cops look at a Black person, a tiny little Black person, you know, and they have guns and they have all of these things, and they immediately, this Black person is gonna, I mean, you know, I'm saying some very controversial things, but it's so clear that that's what's going on. And, you know, someone who is handcuffed, no danger. And yet it's like, I will teach you never to, you know, it doesn't even matter when you comply, right? I mean, if you look at some of the stories, it doesn't matter when you comply. You know, you comply and you still get killed. And, you know, as a mother of brown adult children, you know, it's like, oh my God, I can't even go there. And I know Black moms and brown moms have to go there, you know? So we've got to, you know, I made Barb pull all the data on the towns, because schools are now they're more and more Black. And if you look at the data on schools in some of the suburbs, Henrietta and Irondequoit and Greece and Gates, the schools are more and more, we have Black and brown children, and can't pull out the urban suburban. Usually that's not a big number. So I was like, surely the numbers can't look the same as, you know, 30 years ago, you know, because I've been cutting data every, you know, we've been doing these maps that Shane showed for, you know, 25 plus years. And I looked and no, it's still highly segregated. Waiting for the 2020 data. But you know, there's American Rescue money coming in. You know, how do we make sure it goes to the people who suffered the most from COVID? It's going to be hard. I know Simeon Bannister has been doing some talking about it. But we have to pass zoning changes. And I'm literally like, everyone's on who's on this call, run for town board in your towns. And I don't know if all the towns are here. You know, they're doing some cool stuff in Pittsford. They're doing some other cool stuff in some of the other towns. But, you know, it's I don't know. I don't know if that answers the question.
I think that does a good job of it, and the slide's been up so people have had a chance to read it. So I think we'll take like about a 5-minute break. People can go use the restroom. Please type some questions in the Q&A. I've been jotting down questions I have for the panelists. So put in your questions and we'll come back on my clock at 7:08, come back at about 7:13.
Is my mic still on?
Your mic is still on.
Aaron's question. Basically, I was trying to, so if you look at the resources, there are very specific comment letters that we worked on, that Barb actually wrote, where we go into great detail as to some of the things that banks can do. But one of the other things is we need to, you know, those entry-level products, we have to have safe and affordable entry-level products so people aren't trapped into, you know, predatory credit which
So
they
I
can
hope
never-
Aaron's still on, but Ruhi, before you give any more pearls of wisdom, I would
That's
wait because people may have left their computers since we gave them a break. But I did also let her know that your slides 10 through 15 have a lot of like compact information on that too.
Right. And
But we'll
there's
circle back.
a lot of things, and our website has a ton of, and you know, you can email us too, so people can email us.
Excellent. We'll
Thank
pick, that's where we'll pick up when we come back.
Thank you for listening to a lot of information at 7:10 in the evening.
We've got a couple of great questions coming in. So when our time is up, I don't want to short anyone's break, but when our time is up, we've got some great ones to dive into. It's killing me to even give a 5-minute break. All right, by my clock, it's 7:13. So I have given the 5-minute break that's killing me to give because I know that you guys have such great information to share. So we're going to circle back to where Ruhi and I were kind of talking during the break, which is the question that Erin raised in the Q&A. She was asking about specific steps that can be taken by the different constituencies and what they can do. And then she later said, oh, I see it's in the presentation, because Ruhi came back and circled back to it. But Ruhi had a more in-depth answer, so we'll let her give that. And then also for anyone who is looking at the questions, there are the specific slides 10 through 15 gives kind of the bullet pointed list of things that those constituents can do. And then Ruhi, you were saying that there's additional information. So unmute and go for it. You're still muted.
I have a lot of links. The two of the links I think are to the Greater Rochester Community Reinvestment Coalition letters that have a lot of data information, and then all the different not-for-profits come in and they were at the meeting, or some sent information letter, and we put in there, here are all the things we need to do. So is that what you wanted me to say now? Because there are other questions too. There's a question on inclusionary and exclusionary zoning from Erin. And Melissa, do you want to talk about that? We actually had a very in-depth discussion about inclusionary and exclusionary zoning with some senior people at City Hall, and it's complicated. And obviously I can't say the very specific things. Do you want to say anything about building in the city, Melissa? You're on mute.
I don't specifically know what you're asking, Ruhi.
So there's a question about, okay, sorry. So Aaron says, I'm trying to see if I can find the question.
You're jumping ahead.
So I'm saying, okay. There are various questions. Please cover me. Somewhere Aaron says something about, where did that go? Or did she just
I
send
think it was Lisa, or maybe she sent it directly to you. Lisa asked the.
Someone asked about if the city changes zoning and the suburbs don't, essentially it's just going to continue segregation. And she's right. I didn't know if you wanted to, I can't find the question now.
So I'll go ahead. So the question from Lisa is, what happens if the city of Rochester tries to change its zoning to upzone and no suburbs do? Will it further concentrate racial segregation into the city? And we'll let Melissa go ahead and field that one.
Yeah, I'm not really the expert on zoning.
Yeah, so so I've started to think about inclusionary and exclusionary zoning. The big Supreme Court case of Worth v. Selden, if I remember correctly, and I think someone, I don't know if Metro Justice's treasurer is on here. Metro Justice sues Penfield and says, hey, we want to build affordable housing in Penfield. And the Supreme Court says, hey, Metro Justice, you don't have standing, which is basically, who are you? You know, you don't have a legal right to bring, and it essentially is like this standing can be, standing in the legal world is like, it doesn't matter whether or not there's a case, you aren't the right plaintiff. So I was actually, when my husband got a job at the U of R, that was the first case I read. I knew I had to be admitted to the New York bar. And I said, oh my God, where am I going to Rochester? What a city. And I was like, my first exposure to Rochester was as basically, you know, racism. So, so I have talked to the city about what we would call inclusionary zoning. And someone I respect a lot, actually via Melissa, gave a very complicated answer about what would happen if we had inclusionary zoning, as in, you don't remember, it doesn't matter, it's okay. And basically the answer was because of pricing. So if you're going to do inclusionary zoning and you're going to say 20% of the homes have to be affordable to X% of median income, say 30 to 50% of median income, and you have to have enough subsidies. You need really, really deep subsidies to make that happen. You know, remember Melissa said that house, they were sold at $50,000. I don't know how much they paid, but essentially when you're looking at an acquisition rehab, you buy a house, you got it and you rehab it, that's essentially running around $100,000, could even be more because labor and costs have gone up and etc. So the math has to work, and for the math to work, you essentially need local, state, and federal subsidies. So local subsidies is CDBG money. State subsidies, again, the state has funding, and federal subsidies, like we just saw, like just now, I think, you know, Secretary Fudge just announced 200,000 more housing vouchers, which is the Section 8 program, which is enough. So it has to be thought through, and it's complicated, and I don't have a solution, but I've started thinking about it, and I'm going to be talking to people, and we're going to start thinking about it. You know,
and people on this call can start talking about it in their communities.
Yeah, absolutely.
And then you're giving a great answer, but we do have a short amount of time. I want to hop to some other questions. So I see a number of questions back and forth about the comparison between a community land trust and the Mitchell-Lama program. And there's been some responses from the panelists. So hopefully folks are also following along in the chat here. We're having a dual conversation. And Mitchell-Lama is a state subsidized housing. And then Shane has passed along a link to people if they want to learn more. Shane, other than finding the link, are you familiar with the program? Do you want to say anything quickly about it?
I'm no expert, but it's subsidized housing. We have some of it here in Rochester. Cuomo says he's going to rehab some of it. Did you have more to add on that, Melissa?
Well, what I was going to add is, so Mitchell-Lama housing is typically given, you know, like the housing will be affordable for a designated amount of time, 30 years. It was, is one of the standards. And then after that, it doesn't have to continue to be affordable. Although, so it just keeps coming around. Well, now what's going to happen? This subsidized housing is no longer going to be subsidized. What will happen to these are people who will be displaced. So that's where I would be very clear. The community land trust model is not that Mitchell-Lama. It's actually a solution to that because it's the kind of housing that retains its affordability in perpetuity, in a permanent way. And those subsidies, any federal or state or dollar subsidies that go into the rehab of a house stays with the land trust and keeps the property affordable. To the next home buyer. Or like in the case of our rental units, those are going to be permanently affordable rental units for ever, not just for 30 years.
Okay, and then I'm
I
going to
would
jump.
argue though, real quick, that when we talk about affordable housing in Rochester, Mitchell-Lama is not the norm. It's a lot, mostly low-income housing tax credits. So everything you've seen in the inner loop or Warfield Square in the Beechwood neighborhood, it's low-income housing tax credits where banks are paid to do it, where everyone's paid, the developers, it's a cash cow. And it came with the '84 tax reform bill that instead of public housing, now let me tell you, white people got public housing in Rochester, Norton Village, Ramona Street, Seth Green, Cobbs Hill, that was whites only, Brighton Manor, affordable housing for World War II veterans. Howard Coles had all kinds of Black veterans that met every requirement applied. It's in all of his archives, the applications. Elmer Milliman and his friends denied them every single time because of their skin color when they tried to apply to public housing. Same was true across the country. All of a sudden, Black people have access to affordable housing as the 50s and 60s come into gear, and white people start to say, whoa, uh-oh, not sure we like this. And by the time you get to Reagan, there is no more affordable housing. It's just these housing tax credits, and they're only affordable for sometimes only 20 years. And then these big developers can cash in. One, it's subsidized to build it, and then two, they can jack up rents in these gentrifying neighborhoods like a Beechwood or a Plex. And to me, that's why that community land trust model has to be tied in with something like LIHTC, where LIHTC needs to be completely reimagined to actually be something that's housing justice.
All right, I'm going to jump again, if I may. I'm sorry, it's so in depth and you guys have such amazing things to say. One of the questions that just came in is, aren't deed restrictions and discriminatory zoning laws illegal and unenforceable? So two things. A lot of the restrictive covenants, yeah, they are unenforceable, and a lot of them have actually termed out. They had a set number of years on them. However, the damage that they caused just by being recorded and being out there and living on the public record still exists to this day. It's a big blaring neon sign that says you are not wanted, you were not wanted. So the goal is, and we actually have a subcommittee formed at the Bar Association that's a subcommittee of the real estate and the President's Commission on Anti-Racism, to try to help communities both repeal them, even though they're unenforceable, but it's a reckoning of the neighborhoods to come to terms with the fact that this existed in your neighborhood, and then to replace it with an anti-racist covenant. So to go beyond just wiping it away, reckoning with it, but also to replace it with something that says affirmatively going forward, your neighborhood wants to be inclusive. It wants to not discriminate any further. So if anyone's interested in that, please email me, because I'm working with the Bar Association to put together some forms, put together some resources, so that if neighborhoods want to do this, to take care of their racist covenants, that they have some help to do that. So any lawyers out there interested, please reach out. I took that question. Another one here that I think is kind of Shane, from Dwayne Basco. How do we continue to educate people to the facts when some seem determined not to have this information available at work or in the schools? And I know that your school is very committed to it, but it's a valid question.
Well, it's huge right now. So I'm sure all of you have heard in the news about critical race theory. It's like a college level school of thought around systemic racism, right? I'm not teaching critical race theory. I'm not advocating that we teach elementary school students it. It's like, it comes out of the 70s, Derek Bell, Delgado, Kimberly Crenshaw. It's fascinating stuff to read. And I recommend looking up books like Faces at the Bottom of the Well. There's a lot to learn. It's an incredibly interesting school of thought. But we are teaching the New York State Culturally Responsive Framework, which gives us direct permission to tell the stories of redlining, to have curriculum developed by Black and Brown people, like our curriculum is at the Pastone Foundation, where the Q's superintendent's curriculum is, that tells some of these stories in classrooms. Now, what's fascinating is that, as you saw in many of our local school board elections, especially in Fairport, where the anti-racist side won, people are demanding that racism not be taught in classrooms. What they're really saying by saying we don't want critical race theory, they don't know what critical race theory is. They're just saying we don't want racism talked about in our classrooms. We don't want to make space for that for our kids. Like, let's just teach it business as usual and ignore that any of those facts are history. And
because the status quo benefits them.
The status quo continues to benefit. And what they're saying is, well, our kids are too young, or you're going to make our white kids feel guilty, or you're going to, like, any of those things, instead of actually, we're trying to empower Black and Brown and white kids to be a part of making change if they choose. There's absolutely no indoctrination going on. Looking at the primary sources of a redlining map, racial covenants, and the stories of local civil rights leaders, no one has a problem anymore, but they did, teaching Rosa Parks and Martin Luther King, right? But why can't we teach Alice Young and Dr. Cooper and Ruhi Maker, right? Like, those are stories that kids should learn about, and if they choose, be a part of creating that change. And here's the thing, oftentimes those parents' voices are incredibly loud, and these parents are emailing teachers and school boards, and I can tell you from my experience across the county, the level of intimidation that is being doled out against teachers for just trying to teach the local history of civil rights is absurd. And people like yourselves, lawyers who have considerable power and influence, an email from you to your school board and your child's principal and teacher, thanking them for teaching this and encouraging them to tell the real story of what happened in Monroe County, and that story of civil rights, that is something that is needed. To me, standing by is being complicit in allowing those folks who have won since the lost cause of the Civil War narrative are continuing to almost start to win now. And we're at this critical point. And in some districts, thousands of white parents have emailed and said, we want this taught. And it's made all the difference. And that's staying in districts like Penfield and Fairport and Spencerport, who have had incredible success working with students and teachers.
So emails to school boards help. All right, people,
It
take
helps.
note.
Go to your school board meetings, talk to your school board members, and ask your child's teacher. Because sometimes your child's teacher is going to not teach it because they're afraid to teach it. And they can. And all of its public and free curriculum, there's incredible resources and primary sources. It's an incredible opportunity, and would love to talk more. And you can email me. Would love to talk to you more about it, which ties into that question from Jill about, aside from what Ruhi and Melissa are saying about solutions, what else is there on the table? And I think a massive shift in the political will has to happen. That equity and an inclusive agenda has to be on the table. At our last county executive race, neither Bello nor D'Onofrio addressed exclusionary zoning, school segregation, even though we are #1 in the country for school segregation. And yet somehow in our county executives race, that never came up. And the reason it didn't come up is not just, in my opinion, cowardice, but it's the reason that people in our communities, people like ourselves, are failing to demand that it be talked about. And we have a responsibility to demand that. They're just representing what clearly is what people in our community want, that status quo of segregation. And we have to get louder. We have to keep having these kinds of events, but we have to tell other people about it and build that momentum and political will for a true anti-racist equity agenda in our community.
And we're not going to get to all of our questions, but one I want to circle back to, which Melissa has answered in the chat, but I think is worthy of being said aloud in case anyone's not monitoring the chat, is how do we get involved with or support community land trusts? So Melissa, please.
Well, so I said, to get involved with City Roots Community Land Trust here in Rochester. You can come to a membership meeting. You can participate in one of our many committees that we have to do the work of developing the land trust. And you can join as a Community Land Trust member. There is also a statewide Community Land Trust initiative happening, and so people can also get involved with that as well.
We'll also take your donations and we'll put them directly into I think we just bought 7 new properties with enterprise funding, and we need that. We'll also have you come volunteer and pull staples out of the floor. Whatever you want to do, we will take it. And we think this is huge. Also, I think we could have suburban community land trusts. In Brighton, they're starting to talk about that. There's some talk at a county level. And that's one of those ways where it's part of reparations. A town like Pittsburgh, I don't know, they could buy 100 homes. The money's certainly there, put every one of them in a land trust so they're permanently affordable. And for the next 100 years, that subsidy could continue. That sounds crazy, but why is that?
Love it.
At all?
Why is it crazy?
Tomorrow, the wealth, I mean, you could combine the wealth of just 20 or 30 people in Pittsburgh and they could do it tomorrow. So I just think those kinds of ideas, we shouldn't put those off the table either.
And we've technically reached our time, so I don't know if the Bar Association will be booting us off, but you guys have been amazing. And I would love to keep going because we've got a couple questions we didn't get to, but I guess we ought to be respectful of everyone's time and say goodnight. But thank you, all 3 of you were just amazing.
Thank you for having this and, being willing to make it happen. And we're happy to keep on talking.
Well, if anyone wants to stick around, as long as the Bar Association doesn't kick us off. One of the other questions that came up was, what can the bar do to ensure that lawyers are held accountable if they allow their clients to engage in illegally discriminatory practices? Whew, that's kind of tough.
Call each other out. That's what I think. In education, teachers are just starting to do this. I go to every freaking committee meeting in my district that's related to any of it, and I speak up. It's incredibly uncomfortable. I didn't do it when I first started, but for those of you that know what's going on, and I bet some of you do, you got to speak up and be willing to take that risk, because to me, it's worth it. If Judge Davis can do it in the 50s, why can't lawyers today do it?
And why can't privileged attorneys today do it? He was speaking from a point of being discriminated against. If we are in a position of privilege and know of something, you're right, people need to speak up. And I'm trying to think what the more official outlets would be aside from just speaking up individually. But I mean, I guess the number one thing is, don't you ever advocate for it and don't let your clients get away with it. All right, let's see here. And the Bar Association said they're not kicking us off. So I'm going to gleefully take as much of your time as I can. I think we had another question or two that we missed. I'm scrolling back through the chat because some of them you guys answered already on the fly because you're just that good. Let's see here. And I see that Shane also dropped in the City Roots Yale report on racial covenants, which was an amazing article and just a great resource in pulling everything together.
Can I mention one more thing too, not just about that. One of the authors of that, Connor Dwyer Reynolds, who's the executive director of the Rochester PAB, a good friend and a local Penfieldian. He wrote his Yale law thesis on the town of Penfield and that case Ruhi mentioned, Worth v. Selden. And it documents how race was explicitly a part of Penfield's exclusionary zoning code. I mentioned it a little bit in my talk, but if you want to read the whole story and learn about how in the 80s, Penfield actually admitted that yes, race was a part of why they switched to their exclusionary zoning, which is just exclusion based on class. It's incredibly fascinating to read. So recommend that.
All right, and as we loop back again, the chat is active. So Lisa responded, you could do an ethics referral if attorneys aren't calling their clients or assisting their clients in doing illegal discriminatory practices. Jill Paperno put out there in the chat for folks who aren't reading it that the Lawyers Coalition for Racial and Social Justice is working on a program about issues in teaching and restricting teaching and about racism in history in schools for September. So that's good. There's going to be something coming up. And then I think that was it for all of our folks. As I say, I had jotted down a zillion questions in case people didn't bring it up, but I probably should let you all go. But I am going to ask just a couple of my questions that are tied together with the community development financial institutions. Do they attempt to specifically, because they're trying to help in their communities, do they try to target BIPOC people so that they're having a greater impact, or is it really just focused on low income?
Both. It's really focused on both.
Okay.
So while many of the people are low income, there is the whole racial equity and inclusion, racial justice are big parts of the values of all CDFIs.
Okay. Which it just seems so important, because as you guys share all of this data and all of these anecdotes, that clearly Black, Indigenous, people of color have been the most harmed by all of these policies. And so as policies come out that attempt to ameliorate some of these past injustices, but then to some of what Ruhi was saying, but they're not targeting BIPOC people. They're just, they're trying to make it low income. They're trying to make it seem fair, but they're not really addressing or remedying the past.
It's statutory. CRA is LMI, low moderate income. We're trying to change it to have race added.
Yes.
And as we talk to the banks, after George Floyd's death and Daniel Prude's death, I've always tried to talk, when I talk to the banks, I push them as far as I can push them, but make sure they'll come back and talk to me again. So, to some extent, you things that I'm saying now, if I were saying them in 1992, actually the very first meeting, we had like a huge fight. We didn't meet with the banks without the regulators. They had to be there because we said the bank lied. The very first meeting, they said, this is what happened. We said, oh no, that's not what happened. So, and literally we used to only meet with the regulators. We wouldn't meet with the banks because we could, they would lie or whatever, sorry. Essentially we are now saying, and again, some of these conversations are confidential. We're saying, I want a racial breakout for everything. Every grant, I want a racial breakout, not just for the outcomes, who's getting the money, but also the makeup of the not-for-profit, the board, the senior leadership, the staff. The biggest thing that I will say to everyone who's willing to listen to it, I beg of you, do not design programs for Black and Latinx or Asian or refugee people. Don't have a majority white organization or a majority white group of people with a few token or a few people. If the power doesn't rest in the BIPOC, if the power doesn't rest, the Black, Indigenous, the program, they're not, you'll ask them and say, oh, does this sound like it's going to work? They're just going to say yes, because the power balance is hard. And when you actually challenge, even good progressive white people in Rochester in the US, they get really mad, and believe me, I have endured hell, to be perfectly honest with you. And so as long as white people are going to get mad and push back, I'm not talking, it's like, obviously I do racial justice work, I'm talking, but there are certain circumstances, I'm just not talking to white people anymore. It's a sad thing to say. I'm being really public about it. I just can't do it anymore, and so you all have to do your white ally work, or whatever you want to call it. I know some people don't like the ally word. You have to do your own work and say, this is not about you wearing a KKK hat or anything like that. This is structural racism, and we try to explain this as best as we can. We have other information. Go back and read it. It's the structures. We set up people to fail. We set up poor people to fail, but we set up Black and brown people to fail even more. Not to say that people don't succeed, they do. And everyone say, well, if Obama became president, why can't? Well, Shane teaches these children. These are amazing clients we have. Our clients are amazing. If I was faced with what they are faced with, I would just like completely make them, I'd just be destroyed. They do so much. And, and it's, like I said, it's like, I'll just stop. It's 7:39.
No, but you were amazing. And I had one more question, and then our
Melissa
group
was
is
gonna
starting
say
to go.
something.
Oh, sorry, go ahead.
Well, I just wanted to, because I saw the change that included the color of law, that book as a resource, as a reference point. Another book that I want to just put out there and recommend is The Color of Money. If people haven't read The Color of Money, it's a really important book that talks specifically about how Black banks have been excluded in the very similar, very same ways to keep the success of Black banks from being able to impact the racial wealth gap historically, and even it continues. And it's a really important book that I think people should be
Is
reading.
that also by Richard?
It's by a woman named Mirza Baradon.
Thank you.
Yeah.
I was going
And
to say,
she's actually supposed to be the next Treasury Office of the Controller of the Currency.
Right.
We thought she was going to be the Office of the Controller of the Currency, regulating all the banks. The banks are like, oh my God, no way. And so it's still not happened.
and
Thank you,
still have a
Shane.
few people who are hanging on, so I'm going to keep asking some of my questions until we have people peter out a little bit, and until you guys say no mas. The community land trust, do the folks who are going through your program get traditional bank financing, or are you doing essentially seller financing so that you can ensure that they get a better, more affordable financing?
Well, the credit union, Genesee Co-op, agreed or set aside a number of our mortgages specifically for community land trust borrowers. Community land trust mortgages are technically saleable on the secondary market to Fannie and Freddie, both of whom have a community land trust product. But a lot of lenders are not familiar with the product or comfortable with the product. And so there's a lot of work that needs to happen. Obviously, I have been involved with land trust for 30 years. So I was very excited to be able to make the land trust mortgage financing possible. There are a lot of legal aspects of it that were quite challenging in terms of specifically lawyers. The home buyers lawyers we had a hard time finding one who was willing to take a look at the ground lease in addition to the contract. It took us quite a while to find an attorney willing to do it.
So now are you referring home buyers to an attorney who is familiar with the structure and doesn't push back against it?
Well, the attorney who did it responded that he did not plan to do any others. So we're actually in the process of trying to locate additional attorneys who we can refer the home buyers to. It's a problem.
Yeah. Well, it's a unique structure.
Solved if a few people decided they wanted to get good at that in Rochester and do it.
Right.
We'd love to work with them. Those things would be huge.
That was one of the reasons why I was like, I want to talk about community land trust, because I want the model to get more known out there in a across a broader spectrum of folks, especially attorneys, because I think sometimes people fear what they don't know. Not sometimes, like always.
All right, you guys have been awesome. And unless you have any finishing thoughts, because I've kept you 15 minutes over and a good portion of our listeners hung on with us, but I'm not being respectful of people's time anymore. So I'll let you wrap it up if you've got any last thoughts.
I have one last thought. So a big reason I'm here is because of my late friend Wallace Smith, who's on the board of the Land Trust. He was the last president of FIGHT. He helped build FIGHT Village, affordable housing in Rochester. And when he died this spring, he did not own a home, right? His dad before him did not own a home. And part of that is directly faced with redlining. When his family migrated to Rochester, they ended up in a covenant lease on Philander Street. Messed up deal that they were paying into a home and building no equity. They lost the house, and that neighborhood got destroyed. Wallace spent the rest of his life fighting for racial justice in Rochester, and that guy did not build wealth through housing. Whereas you compare it to my grandfather, who's the same age as Wallace. He got a house in Greece, it quadrupled in wealth. It sent my parents and me to college. I think of me crashing my car my first year as a teacher. I had no money in the bank, but the next day a check came in the mail for $3,000 because that money was just there, and a lot more of it was just there. When I think about what Ruhi and Melissa were talking about with these car loans, or even how I was able to buy a house with 20% down, and thinking about that generational wealth, and then I compare it to my friend Wallace, who didn't have that, and yet his whole life gave everything until the very end through Community Land Trust to fight, to Freedom School, fighting for housing justice in our community. It's that keeps me going and why I got involved. And one of the things Wallace always said to me was, we have to have reparations. I need reparations for slavery, but I need reparations for what happened to my family with housing here in Rochester. It's unjust and it's wrong. And I try to mention that every time I speak, that reparations has to be a part of this conversation. And I recommend Sandy Darity's book that talks about reparation. I'll share it in the chat. That's my final thought. And just always
Can
want
I
to
just add
acknowledge Wallace.
one quick
Yes.
thing? On Friday, I think I got an email from Brad Willows, who some people may remember. He was in City Hall, and he now works for the FEC fund. And one of the things that's happening is as folks are dying, they don't have clear title to the property. And they're very interested in figuring out a way to make sure, and Liz had a webinar, and in another city, they have this program where you essentially get pro bono legal representation, I think from a real estate lawyer, and you make sure that there's clear title so that's all fixed before the person dies, because otherwise, as Shane just said, apparently there's a lot of title problems that folks have, or there's a no will, on and on, it has to go into probate or whatever. So I was actually, I emailed folks out and I said, I would check and see like who, in the bar, or would it be, the pro bono program, how would we set that up? They actually want to talk about it and develop this program. And they may even have money for it. So that's another thing lawyers can do, real estate lawyers.
And then I had one other question because I'm so bad. It struck me, I know that the lenders take a risk and that's why people with subprime credit pay higher interest rates, but it struck me, you're charging the people who can least afford it the most interest.
No. I'm sorry I didn't get this, and maybe Melissa wants to say it. So when lenders of unregulated finance products make enormous amounts of money, it's like, bank, I won't lend to you at 10% because you qualify for 10. Doesn't look good when I do a double digit. Unregulated finance company says, fine, I'll lend to you at 24.99%. I'll make enormous amounts of money from you. I mean, rent to own, overdraft fees. That's the whole point, that because banks aren't willing to do safe lending at whatever a rate that's commensurate to the risk of the borrower, the unregulated market, it makes enormous. I mean, if you look at the rent to own stores and on and on and on, it's like people make money lending to the poorest of the poor, enormous amounts of money. I don't know if Melissa wants to add to that.
I was just going to say, Cassie, you're right.
I feel like they should be offered a lesser interest rate. Like, why is it so inverted? It's
because, that's what we got.
Painful.
That's what the conversation we started to have with the banks, especially the local lenders. It's in all our comment letters. To be continued.
Yes, you guys have been amazing. I really will wrap it up now. Thank you. You guys have been amazing. And thank you for all of the participants who hung out with us through our ridiculously long Q&A. And folks, before we shut down, click on as many links as you can out of that chat box. There's a lot of great articles and books and resources. I've been opening windows off to the side so that when we lose our Zoom link here, that I can still go back and grab some of these things. You guys have been a wealth of information.
Thank
Thank
you.
you for having
Good
us.
night. Good night.
Good
Have a
night.
good,
For having
good,
us.
good week.